All right. Good morning. Good morning. Good morning. I just got to get the Discord all set up and we'll get rocking and rolling on there. It is 9:17 a.m. Eastern. We're going to live trade the market open. MadMaverick is unable to stream today. We're doing a little switcheroo. Let me hop into the Discord and explain that to the members as well. And I guess I will put my camera on in there as well. All right. Good morning, everybody. Good morning. Good morning, Adrian. How you doing? Can you guys hear me okay? And can you see my screen? I want to make sure that this is smooth as possible. I do have my Monster. Hello, Monster. If you guys are looking to sponsor anybody, I'll be here all week. Nikki. Oh, I guess you can't hear me because it muted me for some reason. So we're going to unmute. With unmute, all things are possible. Good morning. All right, you can hear me now? All right, beautiful. Thank you. Appreciate it. And I'm unmuted on social media. So I'm also on YouTube, Twitch, X, and Kick this morning. So we're going to go ahead and we're going to behave for our guests, right? I'm just kidding. What's up, B. Michelle? Morning. So it is kind of one of those weird mornings in the market again. We've just got a mix of volume, right? So we've got XPON here obviously is getting the lion's share of the attention this morning. We've got Trib, which is pushing up aggressively, but the volume to market cap ratio is very low. I'm not going to get too far into all that today. I'm just kind of watching these top four, basically. So that's going to be XPON, Trib, SNOA, and AERT. I've traded each of these historically, and we've had some good times. But I just want to point out really quick that I am not MadMaverick. It's not a case of he woke up and put his accent off to the side. He's having some computer issues today, so he's unable to live stream on socials. So I just want everyone to know that it's me, and we had to kind of pull a sneaky on you, unfortunately. But he wants to be here. He just can't because technology. He's limited by the technology of his time. But how are you guys? Tell me about your morning so far. Is everybody blown through all their buying power already? You guys taking out mortgages? Yeah, it's the beard. We look different today. See what oh, wait, alarm clock. How you doing, buddy? He's ready to trade. He wants to trade. What's up, Porter? How's it going? Also, let me, I'm just going to go on my X account really quick and just retweet this just so that both the people that are following me also get this stream. And give me just one moment, guys. So I'm just kind of letting the market simmer a little bit. You know, you don't want to rush into stuff when the volume is kind of blah, right? I like that strong directional volume. And we'd like to see some quality candles, right? This is not quality. You've got wicks all over the place. The order book's kind of blah, right? So we're just going to hang out for a little bit. We're going to wait. There's potential on it, but we don't want to just trade the what if. I'd rather trade the what is. All right. Sorry, let me just retweet that on X. All right, there we go. We got Porter on surround sound. We got multiple platforms. Duco, yes, it is. So I stole his identity tonight. No, he's having some computer issues. His desktop can't. Something's wrong with it. He can't do the live stream on socials. So the alternative would be to cancel the like the YouTube and the Twitch and the Kick and the X, and then just do it here in the Discord. But that wouldn't really be fair to everyone else who's watching outside. So you guys are just stuck with me instead. You need results, not excuses. Yeah, don't be sorry. Be better. Spy's taking a stroll in the park. What are you guys looking at, Spy? What do you see? It looks like it's Central Park and it just got mugged. What happened there? Spy, you don't resist a burglar, a robber. Okay. That's like Batman's parents. Is that too soon? They just left the theater and they're having some complications about. Yeah, exactly. SpongeBob. All right. So we've got Trouble with Tribbles. We've got SNOA. This one always makes me think of the Sinaloa cartel. So, because it's robbed so many people. No, I like this one. It just needs volume, right? That's the theme of mornings like this, is without that volume, this is all super sketchy stuff. I like the algo structure on this one. I might look for a trade on this one if we can get some of these little walls to break here. Actually, I think I like it right here. Gonna wait a little bit though. Yeah, it's not quite strong enough. I like really strong volumes. I like really big walls to get broken. So I like this one, but it's not quite ready just yet. I'm gonna watch for 223 potentially. And yeah. Yeah, see, there we go. I'm gonna go ahead and get in here. Now this is a risky entry, obviously, because we have we've got some chaos brewing in the pre-market here. So I got a high right here that I can look for. I'm gonna go ahead and see where that volume goes. I see some good walls here up to 240, 275, $3.33. So I think we're okay here to lock some of these profits here in a minute. So we're up about 8%, 8.5%. Gonna go ahead and lock some here just because I don't like it stagnating. So I locked 75%. And then I got my remaining 25%, but I have to set this to 100% to sell it. Now, this stock here is 16.39 million. It's got about 1.5 million in restricted shares. So I'm not too worried about an offering or anything like that. But I do want to see what happens over 240. And, sometimes stocks like this, I just trade a few times, and yeah, it is pretty quick. I'm sorry about that. These are momentum breakouts. So we got to be very fast on these ones. So if you're watching on YouTube, let me put that link in the Discord. I'm sorry, in the social medias here. If you're on the YouTube, you're going to have that delay. It's not a big delay anymore, but it's still a delay in that if you're trying to watch these scalps and stuff on your own chart, it's going to be very difficult to keep that timing in sync. Okay, so it's beneficial to be in the Discord. Also, let me put one link on there as well. This is for Lee's coaching program. So if you're newer or if you're just looking to optimize or looking just for a strategy that's simple and doesn't require you to stare at charts all day, that's kind of what the intent of this stream was, so he could demonstrate that. But we're again, he's having some computer problems, so it's always worth checking out the coaching program if you just feel like you just need some extra mentorship. And a pretty good rule of thumb is if you're going to lose like $40 next month, then it's worth at least getting some value out of that, in my opinion, anyway. Dang, I like this. Yeah, I think I'm going to grab some of these as well. I'm going to reduce that to 45% and set it to last price. Now I'm just going to look for a little break over 380 on this one. This is XPON. And I got to see that volume come in, right? I don't want to see it hang out and putter around. I'm going to go ahead and grab it right here. So the walls are getting chewed on and I like it. So I got into XPON. I'm going to go ahead and set my sell order up. And I'm doing pretty aggressive position sizes on these because like we'll go through and we can simulate trades and things like that. But these are pretty aggressive position sizes. I personally just like to do 2 trades a day. I don't like to hang out in the market all day. I like to just get in and out. So when I live trade for you guys, I kind of just do the 2 trades and we get out for the day, right? Now I can continue to look at setups and we'll talk about some strategy and we'll walk through some stuff. It's not going to be a psychology ramble again. But this is the kind of, we're an auction cross, by the way. This is the kind of approach to the market that I like. I just like getting in and out. I don't like hanging out after I clock out. I just want to get in, get out, make some money, right? And the biggest part of that is not losing a bunch of money. So I might end up having to cut this one here if it doesn't pull back up. So I got my sell order set. I'll let it cook for a little bit. I'm expecting some volatility. We do have, again, this is kind of the golden child before market open. So that also means it's got the highest potential for a trap. But it's also got the highest potential for a big run, right? We saw like BSLK yesterday and ATNF the day prior, or the day before that. I don't remember. Either way, we made some profits. Now I sold BSLK yesterday for a loss and then it ran up like 500% and kind of talk about that. But yeah, that's good stuff. CRWV today. Let's take a look at CRWV. What do you like about it? It's down 2.25%. I'm also on a $200 small cash account, so I can't trade stuff like that on this account. Well, effectively, I should say. This one's had its run. It's kind of pulling back. It had a little relief and then it kind of pulled back down as well. So it's going to be kind of a sketchy watch today, right? Like you have to consider all this recent activity here is bearish, right? So that doesn't mean that there's no opportunity, but we have to wait until at least it starts going that way, right? Because right now it hasn't started that. It's just still going this way. You know what I mean? And that's where we can avoid a lot of pain as traders by just not jumping into stuff ahead of time. Okay. So I think I might be cutting this one here pretty soon. So let me set the sell order up on the remaining 25% of my trib. And we'll just let that, we'll see which one of these walls breaks. If that goes down, yep. And, okay, I want to see some fills below 214 before I cut this. Otherwise, we break up above 216, and then we have potential to run to a new high. And then I'll just, where did I sell the last shares? It was 380. No, not 380. It's the wrong ticker. Was it 380? No, 239. Okay. I was like, that doesn't sound right. Okay. I bought XPON at 380. That's why. How do I feel about BM and R? Oh, Adrian, my screen is blurry today. Oh, no. I'm sorry. Take a look at BitMine here. Is anyone else having blurriness issues? So BMNR is pulling down pre-market. So if I go back to the daily here, we should have, we should have some volatility. Like there's some decision making that needs to happen in this area here, but it's not guaranteed to go in our favor, right? So right now, again, just like the other one, you've got some aggressive sell-off here, right? That's a 21% move to the downside from this peak. So we're going to be very cautious when it comes to timing our entries and getting into stuff. So right now, what I see is a range, right? I see there's a zone here where the price just kind of went sideways, and I see there's a zone here where the price is kind of going sideways. So there's a small gap in between. That's great, but it's kind of small, right? So we can always just kind of see how it goes for a little bit, but I personally wouldn't be looking for a trade until it breaks out to the upside, or at least over this with a super tight risk. But it kind of depends. I know there's a temptation to want to trade stuff that's down a bunch, but that's usually what ends up hurting people. All right, so the market is open. So let me cancel this order here, and then I'll swap back over to my trades. So I'm okay with the like opening chop. I don't worry too much about the volatility when it's kind of pulling up and slamming down. Sometimes that bites me, but for the most part, I'm okay with that kind of whipsaw, especially in the reduced positions like trib. I don't really mind that too much. So we'll go ahead and see what happens there. I do have my hotkeys set up just to exit the position if I want to. It is a super risky morning in the market, so I want everybody to be careful regardless of what you're trading. And then really what we should be doing is looking to get in when price is moving the direction it's going to make us money, and out when it's not. And if you don't have a high risk tolerance, this time of day is going to absolutely crush your psyche. So you got to be careful with stuff like this. So XPON's pushing up a little bit here. I'm going to seek ideally a new high, but no guarantee that's going to happen. The order book obviously is stacked up to 4+, but we'll have to wait and see if we actually get that. And then, yeah, so we'll see. And there's a lot of volatility on trib here, so I might have to cut this one pretty soon. I don't want to take too big a risk on that one. So I'm going to just focus on XPON for a little bit. What makes it a super risky today in particular? The fact that the volume was so, the volume market cap ratios on these was just so low. We didn't have any spectacular volume this morning going into pre-market. Let me change this to a day as well. And on days like that, we tend to get these super wild swings at market open and for that first half hour. So I'm okay with it personally, but it is drawdown and it is very, very sketchy for a lot of people. Oh man, I accidentally. I meant to hit control 2 to sell 75% of the shares, and I sold hit control 3 and ended up selling all my shares in this one. So that means it's probably going to keep running, and just to embarrass me on a live stream. But that's how it goes. It's all good. I'm still net positive for the day, right? Still up 3.5%. Still had a successful trade. It just I didn't execute efficiently, which means I moved my penny down for the day because I made a goof, right? It was not what I planned to do. So that's the important part here. So overall, right, even though I'm taking a risk here on Trib, this is a reduced position. I've already sold 75% of the shares, so this big red number is a lot less scary. And then I had my trade on XBON, which, let me see, what was the, it was 380 up to 409, so 29-cent profit. That's a little under 10%, not bad, right? I'll take it for what it is. And those are both on half positions. So I'm not too worried about the fallout from that little goof, but it is still a goof. So what I'm going to do here is I'm going to update my streak here. Let me just move that over here really fast, just so you guys can see. So if you're not familiar with this, I haven't updated it all week, unfortunately. What this is it's a streak that I put on my screen for you guys. A W means it's a successful trading day. This is regardless of P&L. An L means it's an unsuccessful trading day, meaning there was some sort of deviation or a goof. And then an X just means that day hasn't happened yet. So tomorrow is an X. So the first 3 days this week, I followed my trading plan successfully, and I made a profit. And then today I made a profit, but I didn't follow my trading plan efficiently, which means that it is not a successful trading day in my opinion. So I'm going to hold myself to account there. Let me update the streak here on the camera. Okay, so now that that's out of the way, right, I'm just going to let this position continue to cook. Actually, what's a good percentage here? Maybe I'm just kind of looking at the order book as well. Yeah, all right, I'll let that cook for a little bit. So let's talk about some very thank you, Dico. Let me talk about some very simple strategies here. And remember, I'm net positive for the day, so I'm okay to let this hang out for a little while. Don't let that big red number scare you. It's a reduced position. Now, if we look at X, wow, looks like I'm actually glad I sold, but that's okay, right? That's when we have, when the impulse stops, we sell. And if I had locked the majority of my shares instead of all of them above 410, I'd still be net positive on that one as well. So with that said, let's slap the moving average on here. We're going to use a 20-period moving average. This is similar to what MadMaverick teaches, but it's different, right? Where's the simple moving average? Did they move my Weeble? What are you doing? Okay, they don't let me look up my moving average. All right, so I have here the 20-period moving average. The source is going to be the close for me. Lee uses a combination of the low and the close for his strategy that he teaches in the coaching, but we're just going to use the 20-period moving average for right now. And I want to show you guys, for those, oh, look at that halted. For those that have been in these streams and have been kind of hanging out in the Pookie sphere, if you will, you guys are already familiar with the strategy, but I want to re-describe it so that we're all on the same page here. Sorry, I'm just trying to catch up on all the channels that are moving around. So this strategy is stupidly simple, and its main goal, like all the other strategies I teach, are to reduce losses. Okay, so let's assume we've got the moving average. Okay. Okay, and what I like to look for off this moving average is a small red candle. Okay, and remember the goal. Ignore the pre-market versus after hours thing. I just drew it there. I can move it over. Let's move it over. The main goal with any technical analysis strategy is not to be right? That's not to predict price action, and this is where people get messed up all the time. Do not be a professional guesser. It won't work. I'm telling you right now, you're going to have losses. And if you don't pay attention to those losses, if you lock them in a basement and ignore them, they will get out and do unsavory things. So you have to embrace losses and welcome them into the fold. And let them be part of your trading family. Okay, so let me make that crystal clear, because that concept and the ability to do that is what's going to make you a successful trader. It's not your ability to be right. I've demonstrated it before. You can be net positive with an atrocious win rate. That's a BS metric. So in order to do that, we need something specific, right? Because every trader starts out with the concept of not losing a bunch of money, right? That's the whole point. And then we get comfortable and we start trying to make money, and that's where we mess ourselves up. So let's focus on something specific to bridge that gap between concept and execution, right? Let me just close that. Mesothelioma. Duco in the chat says, I don't know how many times I have to say this. You don't have a loss if you don't sell, and financial advice. You know what? I'm gonna let you have it, buddy. You are correct. Let's go with that. So in this case, this is what I want to see, right? So there's 3 criteria for this specific strategy, and it's pretty straightforward, but it's something that I want everybody to scrutinize, challenge it, pick it apart, make sure it makes sense. If it doesn't make sense, challenge it, ask questions. Let's have the conversation, right? First step, before we even get this red candle in the mix, I can identify areas where the price is going up versus where the price is going down, correct? From here to here, if I look between these 2 lines, the price is going down, the moving average has a negative slope, okay? From here to here, the price is moving up, it has a positive slope. Does that make sense so far? If it does, throw a 1 in the chat. If you're on social media, throw a 1 in the chat there. If it doesn't make sense, put a 2 in the chat, or if you have a counterpoint to how moving average works. Because I want to make sure everybody is going along with us, right? And then we'll look for some real examples in real time using this strategy, okay? So negative slope, I don't want to trade that because my goal is to protect my money and to make sure that I'm grabbing stuff when it goes the direction that's going to make me money, right? And then when it's not, my goal is to get out. Does that make sense? Unless it's trib and I'm trading it in a reduced position at market open. Don't do what I do what I say. Not financial advice. But if you're a bullish trader, this area right here is where you're going to make the money, not over here, right? This is where you take losses. So step number 1 is I need a positive slope on a moving average, or whatever your specific approach is, right? I need some indication that the price is going the direction I want it to go. And then, oops, I always do this. I always like mess with the chart. I always fidget. It's weird. Then step number 2 is I need to make sure that there's a small red candle. Actually, sorry, I just got to do this. I got to make sure there's a small red candle because this indicates a pullback, right? This is a pullback and retest strategy. It's a continuation strategy. So I need the price to come down into some zone in order to show the transition between bulls and bears, right? And I'm saying it's, you know, bulls and bears and then buyers to sellers to buyers and blah blah blah. That's not really how the market works. And those that are in lifetime, those are that are in the my other streams, you guys already know that. But for the sake of keeping it simple for people on like YouTube, I'm just gonna view it in terms of buyers versus sellers, and we'll get into all that later. So for right now, I need a small red candle above the moving average. Well, the moving average has a positive slope because I want to indicate price compressing into this area of common participation, right? That's what a moving average is. It's not necessarily a guaranteed support and resistance. It's just an area where there's a common pool of participation on average that happens to be increasing over time, okay? Then what I want to see beyond that is a color change, right? I need to see that the price is breaking over that last stand where the bulls started from. So think about it like 2 people, like 2 sumo wrestlers, right? I want to see them pushing the other sumo out of the ring. I want to see them move past where they started to know that they're in control. And that is my entry threshold. Okay, that's when I start to get in. So when I see a small red candle off the moving average, I can set a buy stop order 1 cent above the opening price of this candle here, and that's the entry, right? And then in addition to that, I've got one more thing to consider, and that is my risk, right? And that's the most important part of this. Now, if I took an entry here, and let's just assume these candles have these wicks, right? You know, this candle, the upper wicks don't matter, even the upper wick on this one, because I'm just using the opening price here. And as soon as this candle opens, the small red candles, a timer starts. Okay, just think about these as 2 specific points in time. This is the starting point of that journey. So let me just mark that up here. This is the opening price of the red candle. Red candle opens, right? And then over here is where the price gets broken, okay? Price breaks over red candle open, okay, the entry. All right, so now between these 2 points in time, okay, the price is going to form a low of some sort, right? Does that make sense? Like the bottom of that candle is going to go up and down. The bottom of the other candle is going to go up and down. At some point, there will be an absolute low that's formed. And then when the price breaks over the opening price of the red candle, that's when that low becomes the absolute low between those 2 points in time. Does that make sense? If it does, go ahead and slap a 1 in the chat. If it doesn't, slap a 2 in the chat. And then we can, I would just want to make sure everyone's on board here because I want to teach the strategy first, then I want to demonstrate it. Okay. So Kenny Penny says 1. He's locked in. I love it. Duco says 1. Love it. Adrian J-Wag are typing. And I know you guys have been on these for quite a bit. So I'm sorry if it's like rudimentary for you guys, but I have to kind of make it beginner friendly as well. So when the red candle opens, right, I need a small red candle above a moving average with a positive slope. As soon as that opens, that starts a timer. Okay, we don't even know it's going to be a red candle until it closes, but that starts a timer. Okay, and then at some point, the price will cross over that red candle's open on the next candle or a candle after that. Okay, so this requires 2 candles, one of which needs to be a small red candle. Okay, now between those 2 points in time, when the candle opens and when its price is broken over on the following candles, there's a low that's formed between those 2 points in time, and that'll be the lower of the 2 participating candles wicks. Okay, so that indicates where I put my stop loss. Okay, does that make sense? Let me just make this blue for entry, red for stop loss. Okay, JWAG says, yep, get it. Okay, get a bunch of 1s. Hell yeah. All right. Now this distance between these, that is my risk range. That is the amount of loss that I'm willing to accept on each share that I buy. Okay, and we talk about the 1% rule as well. But this indicates how much risk each share that I buy has to endure if I end up taking a stop loss. And that's okay. It's something I need to be accepting of before I get into the trade. And that's why we map this out ahead of time. Now, this is what protects me. Okay, if I don't follow the stop loss or if I don't map it out and I try to wing it and make decisions on the move, I'm more likely to hurt myself. So I'm not going to do that. I'm going to plot it out ahead of time, and I'm going to use something objective about the chart because the chart's always going to be right. I'm not going to be right. I'm very bad at being right and picking, So I need to rely on the chart because the chart's always going to be accurate at the end. So now I need to take a multiple of this, right? This is my risk range. This is how much I'm willing to risk per share. Then I need to double it or triple it or use some multiple of it above my entry in order to determine where I take my profit. Okay, and that becomes my risk-reward ratio. Okay, so that's where I take my profit. Does that make sense? Nice. Oh, that makes me hungry. Just a full cow. I love it. All right, so I'm getting a couple 1s in here. Does anybody have any confusion or objections at this point about what we're doing and kind of why? Right, so think about these as coins, right? Every time I play this game, I will risk 1 coin, okay? If I lose, I pay that coin and I move on. That's the cost of doing business. If I win that particular round of it, I get 3 coins back. Make sense? Well, that's a lot of cows, buddy. Are you in Diablo? Is it the cow level? All right, so this is effectively the strategy minus position sizing, which we don't really have to worry too much about for this part, right? Because I'm just teaching the strategy here. So we've got an entry that's based on objective criteria with a low risk, high potential setup. We've got a setup that makes sense, right? We're looking for a retest of a support or a compression and release area. And then we're waiting until the actual move in the direction that's going to make us money starts. And then we have a defined cut point in case that reverses and goes back against us. Then we have a disproportionate profit range where we can take our profits. Okay. So I will put a screenshot in the chat for this, just so you guys have a copy for yourselves. And then I'm going to erase this and we're going to go look at a real example. If my snippets thing wants to behave today. Okay. So there's that. So let's go look at an actual example. All right. So it's going to be a little bit difficult on the 1 minute time frame with all these garbage stocks. So we got to go up a couple time frames in most cases, right? So we'll go up to the 3 minute here. And so far, these are all kind of, they're choppy and sideways, right? That's just the nature of these in the market. We'll skip over Trib here because I already have shares in that one. All right, so we got XOS, right? So far in the 3 minute, let's see if we can get a better time frame here. Okay, so let's look at the 1 minute because it's a negative. Give me 1 second here. It's a positive slope, right? So we got that going for us so far. And this would be the setup if I were to use this strategy, right? Now, it's not really a small risk here. It's a 3% risk. I don't really like that, so we don't need to trade that. But this effectively gives us our setup, right? So we've got a positive slope. We've got a relatively small candle, and then we've got to break over that candle's opening price, and we've got a defined low from when that candle opened to when it was broken over, and we've got a disproportionate take profit level for that risk reward ratio. Does that make sense? The chart does look like a taco. Yes. I don't see any lettuce. I mean, maybe the white candles are the sour cream. I don't know how you want to handle that. But does that make sense so far? Now, right here, we specifically have a rejection zone. So we would need to look at the order book here. So 533 wall got pulled. So I have high confidence this should keep pushing higher at least a little bit to hit the target. So let's keep watching the 536 wall, 2356. And this is where you time things, and there we go. So we've hit our target almost. There we go. So easy peasy. Does that approach make sense? We look for a positive slope. We look for a low risk above that slope. And then we look for a confirmation in the direction of the trade. And we set a take profit, which is a disproportionate multiple of the risk range. And then we just get the hell out, right? So let's look at SNOA. This one unhalted, it's going higher. This is just way too choppy. You can trade the order book on this one, but it's pretty sparse. You only got one algo here. So this would be anticipatory. You'd look at like the 599, for a break over 6 and all that. And you could, you'd be getting in way before the other algos jump over here. And really the value here is going to be between outside of 650 or 540, in my opinion. So I'd rather look at the 650 level. You could try to scalp between there and there, but it's probably going to bite you in most cases. So we're going to skip out on that one. What chart was I just looking at for that? XOS, okay. But does this make sense? We're just looking for a little squeeze, right? We're looking for a compression and release above a dynamic support level, and when the price is going in the direction overall, right? Trend is friend. We want to make sure that the bias is in our favor. So we can continue to watch this chart and see if we get another small red candle here. Now, this one is a 3% risk, 3.25%. It's, these low float fast movers, it's a little bit riskier. So you kind of have to have bigger ranges, and that's where you really want to use like the 1% rule. But it works. For what we're trying to do, it works. Now, if I don't want to deal with the low float trash, right, because that's effectively all this is. This is all just garbage. We're just trading pockets of volume when they ebb and flow. That's all I'm doing on these. This is not the way to success long term, okay? So don't fall into that trap. This is on small amounts of my overall money. I'm just doing it to kind of speed things up. So realistically, what I would be looking for is something with a little bit more stability, a little bit more established, a little bit more familiar, and on higher time frames, right? The 1 minute time frame is like an X-ray. Unless you're just looking to do, something with a particular bone in that exact moment, you really shouldn't be staring at an X-ray all day, right? So what I can do is I can look at something like AIP, right, which we've looked at a couple times, and I can say, okay, well, I've got a positive slope this entire time, right? The positive slope started right here, okay? And let me just make sure it stayed positive the entire time. Okay, so it did until about right here is technically when it pulled down, right? So from here to here, let's look and see how many opportunities we would have had, okay? Now this one's a little bit farther away from the line, and the slope just turned positive, so maybe we pass on that one, maybe we don't. But maybe that's an opportunity, maybe not. I personally am okay with a little bit of variance, a little bit of distance from the moving average. And one of the easiest ways to figure out what's tolerable and what's not is to put the Bollinger Bands on. And what I like to do for that is I like to change the length to 20 and the width to 1. And then I just like to show the top one. And then basically anything like this risk here occurs within the first standard deviation band, which means that this would have been acceptable for me. Okay. And then this one here is too far away, right? It's too far away from the moving average. So I would have passed on that one. This one occurs within, but it doesn't get broken over. This one occurs within, gets broken over, and then it stops out, right? Again, you can't avoid losses. We just have to accept them and understand that they do happen. This candle here, we can plot. That would have been an attempt and a stop. So that would have been 2 stops, 1 profit. And then you break over it again, and that would have been an entry. So that would have been 2 wins, 2 losses. You'd be net positive at this point. Then you get another entry right here with a stop loss right here. So you would have stopped out on that one. You would have re-entered on that one. So you're 3 losses, 2 profits so far. 3 wins, 3 losses at this point. And this one's kind of a gray. If it's right at the line, I don't mess with it, but that would have been a win, but we're not going to count that, right? So 3 wins, 3 losses at this point. This is above the zone. So this is unacceptable. It's too much risk from there to there. So I would pass on that one. This one here enters, and you would have had a profit on that one. Whoops. Right, you would have come back here and tested that and then pushed back up. So 4 wins, 3 losses so far. And then the moving average slope goes negative there. And then you would just stop trading it at that point. Does that make sense so far, just as a very simple strategy? I say simple, and then I added a whole bunch of stuff in there, so I'm sorry. There's a ton of other strategies we can use that are a lot simpler if you guys are interested in that stuff. But in the spirit of establishing swing trades and low risk opportunities like MadMaverick does, and I'll put the link here as well. He does a much better job of making it simple. I'm obviously a lot more technical, and I tend to confuse people, and for that I apologize. But I want everybody to understand the main concept here is to identify low risk, high potential setups, enter when it makes sense, get out when it stops making sense, and run away with your profits and protect it as much as possible. That's the goal for any trading strategy. So if you don't have a trading plan built, or if maybe it needs some work, there are many, many ways we can do that. But it has to be a conversation. It can't just be, hey, here's my strategy step by step, follow it and you'll be making millions, because that doesn't work. There's never a one size fits all solution because everybody's different. And we talk about the psychology and the neuroscience elements a little bit more in depth in the lifetime where I coach. But for the sake of keeping this part simple, just understand that there are reasons why you can't do what you set out to do in the market. And it takes a lot of framing, a lot of structuring in those thoughts and in your habits, and a lot of self-assessment. And that's why we can't just say, here, do this, this, and this. It's unethical and it doesn't work. So let me just take a sip of Monster real fast. All right, let's look back at XPON here. It's seeming like it's having a decent day here. So again, this is the one I entered in auction cross, and I fat fingered the sell, kind of to my own benefit though, because I ended up selling all my shares instead of most of them, and then it sold off pretty hard. So now it's obviously pulling back up. So right here, right? Let's look at it right here. And I'm not saying to copy trade this, just look at the data. Okay, we're just collecting data at this point. We've got a red candle open here. We've got a stop loss there. That's our risk range. Let's establish a multiple, 1 to 3. Okay. So now I'm just going to draw this over here. Very simple setup, right? We've got a positive slope on the moving average. We've got a defined risk, and that's the most important part. It doesn't matter if it's a win or a loss. It's defined risk. So let me go ahead and grab a share here just to show you guys. I got to check the box. Sorry. So I'm going to take a higher entry on this one just to illustrate. Now, the only 2 things that matter in this trade is going to be this level and this level. So I can turn everything else off. I can close my broker. I can set a bracket order. So let's go ahead and do that. Let me close my position here. I'm going to set a sell order at 374, right? Because I want it to be 1 cent above, 1 cent below. So 416, 374 for my 1 share. Now I can close this browser right now. I can cover up the screen. Oops. I can just do this, right? Now, don't cheat. Don't look over here and see what the bid ask is, and don't look up here and all that good stuff. Let me just move this over here. And I want everyone to take a moment here and figure out, does this stress you out? Is it chaotic or is it calming by not seeing the price action? Because this is something, don't look at the time and sales either, you little cheaters. This is something that clearly delineates two separate types of personality. Some people are very calmed by it, by not understanding that, or not seeing the price action, like not giving yourself a reason to talk yourself out of trades, or to like constantly re-up that dopamine and have that uncertainty kind of mess with you. Other people enjoy it because it takes the information out of the mix and it keeps the trading nice and calm. So I'm going to get one of two specific end results here. It's either going to be a profit or a loss. I already know my profit is 3 times the size of my loss, and I already know exactly how big my loss is, and it's just one share. So there should be zero reason for me to be stressed about this. And there should be even less reason for you to be stressed out because it's not even your money, right? But it is important to assess that, because what a lot of traders do is they tend to just not know how their brain works. Like, it's very, like, nobody wants to read the manual, and there's a lot of cool features and a lot of troubleshooting that we can do by just reading that manual. So if this is something that prompts a response, an emotional response specifically, let me know, because that's the kind of thing that you can identify about your own trading. We also just make a blank tab here, so there's even less information. Stop working while you're off the clock, right? That's my best advice to you guys. Do not work while you're off the clock in the market. And what I mean by that is, if you are looking at charts after you're in and you're constantly, so I stopped out. If you're constantly looking at the charts and doing analysis and things while your active part of the trade is over, you are doing extra work and you're not being paid any more to do it, right? What you're doing is you're committing your identity to the trade, and you're trying to do what you can to make it work out, right? Because your brain has created an expectation and you're unable to fulfill that. So we are conditioned outside the market to believe that more compensation is more reward, and that is a dangerous habit, okay? You stopped out. What does that mean for your house? I really don't want you guys putting your house on this stuff. So in this case, right, I got stopped out, and now it happens to be pushing up over my target. So what does that do to the brain, right? That's the, oh, I should have, blah, 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 right? There's always that I should have. It's always a hindsight. In reality, I made the best decision for myself in the moment based on the information I had before I had access to this future information, right? I knew I was entering here. Now I took a higher entry, obviously. The entry would have been down here, so I would have taken a smaller loss of 10 cents. But I don't have access to any future information at this point in time, right? And you really have to focus in on the concept of time when you're trading, right? Because that's all it is. It's just time. You're either exposed or you're not exposed at any given time. This is an x-axis is time. The y-axis is price. You're just looking at a function of price change over time, okay? Now, you can put a story behind it if it helps you process things. You can do all these tricks to yourself to deceive yourself into believing that you're going to be right more than you're going to be wrong, and blah, blah, blah. And that's what most traders do. But in reality, you're just watching things happen over time. And it's very easy to slip into that confirmation bias by not weighing what you see after the fact and what you see prior to the fact equally, right? You have to view this for what it is, and that is this is what is, right? This over here is the what if, but you don't know that, okay? So if you stop out and then something rips, it is what it is. You just have to feel what you feel about it for a little bit and then recognize that there's no way you could have known that, okay? I hate seeing people try to game the system and be like, oh, I know exactly what this is going to dip, and then it's going to rip up to $4.74. And then you see it all over like Weeble comments, like, I told everybody. They go back and edit a post on Facebook or X or something. And that's just an ego. It's an appeal to ego that you're just dumping onto yourself, and then it's splashing at everyone around you. So if you sat down with yourself and you had an honest conversation with yourself and said, okay, well, this trade didn't work out, but I did everything correctly, right? And it's just circumstance. It's not a consequence. All right, Duco, have a good one, man. Sorry the sorry, you got to work, and hopefully those cows don't beat you up, take your wallet. That's awkward because your wallet's made out of leather. You get some explaining to do, buddy. But that's where we tend to hurt ourselves, is that we just don't know how to separate the ego from the end result, the circumstance, right? So if you just, like Top says, one strategy, one plan over and over again, your job while trading, especially while you're new, is just to collect data. It's not to make millions in profits. It's to protect your money while you collect that data. Damn, SNOA halted again. What's the float on this? It's got to be stupid. No, it's really not that bad. It's 1.62 million, but it's halting a lot on pretty low volume there. It's the price range, but even that's pretty low. It's usually like 10%. Yeah, as Top says here, just pick something that makes sense. Pick something that manages your risk effectively and lets the profits breathe. And you will probably have a better time in the market than 90% of traders who just can't figure that part out. They can't develop the consistency because they're too busy trying to validate the ego part of it. They just don't know any better. So right here, right? A completely different strategy here. I'm just going to use one share again, and I'm going to trade the order book, just the order book. So I'm going to look for a break over 427. Let me erase all this stuff. Let me draw my level here. And for this, I'm just literally looking for a break over 427. I've got a 20,000 wall here. I just want to get it chipped down to maybe 13K, and then I'll hit my control one, and that'll be that. There we go. So I'm in. Just a super tight risk. If it doesn't keep going, I get out, right? I have no way of knowing what's going to happen here. All I know is what could happen in both directions, and that's all I have to plan for. So again, it's not doing what I want, so I'm just getting out immediately, right? I can always get back in. That's not a big deal. But it's not going the direction that's going to make me money with the setup that I expect to make money with. So in this case, the setup was a momentum break to the upside, and there was no momentum, right? Therefore, it's unhealthy risk for me to maintain that. And I just don't see a need to keep those shares, or that one share, I should say. So me as a professional manager of risk have to make a choice to prioritize eliminating that. Now I've got a wall here at 430 that I can look for. And, I can always just reuse the 427 wall if I want to, but I'm going to wait till the 430 wall because it's a bigger wall. It's more stable. So let me just draw that. All right. So there's the 430 wall. So now I'm going to get in. And again, it's the same thing. If it doesn't go, I don't want to be in it. So we're just going to go ahead and wait and see what it does. So I'm going to hit control. So if I break the low of this candle, I don't want to be in this trade. Can I take a picture? Yeah, let me, I can walk the hotkeys if you want. It's probably easier if I just walk through them. I'm out, right? No hesitation. Well, a little hesitation because I was in the middle of a sentence, but just getting in and out, right? Now, this is the danger with trading these like low float trash stocks after 10 a.m. is you're going to have these little, whipsaws and things like that. So that's why the best trades are going to be directional at market open for these, but that's also the highest risk because when they go against you, you end up in a situation like this, right? So I'm still good to hold my trib because it's a reduced position. And I already took a net profit on it, and I'm net profitable for the day, but I'm just holding this for recovery at this point. I'm not holding it to push over like $6 per share or anything like that. Like it's not a huge trade here. So let's look back at XPON. Now this is two walls that just got broken and then the price failed to move. So that tells me we're heading into rejection territory most likely. Now I can't guarantee that, but I do see there was a big red candle here and I do see a bunch of wicks to the upside. So that supports my thesis. And that alone tells me it's time to stop looking at this stock for a little while until it starts pushing out of this area. And that's how I can just eliminate that stock altogether from my trading pool and not focus on it for now, right? So let me see here. What platform you're trading with? I'm using the Webull desktop app. It's just I like the app better. I don't like the website personally. So let's see what we get here. So this is a good setup, but it's not ready yet, right? So if we get over 186, we proc that wall there. We'll be in a much better spot, but we have to wait until that happens, and we don't control that, right? So we can just close the browser if we want to, set some orders for exit, and go on and live our lives, right? Now, I I'm not doing that obviously because I have my position and a little bit more experience, but yeah, let's walk through the hotkeys real fast. So in the Webull desktop app, you're going to have to go to the settings. It's down here in the bottom left. Then you go to either trade or hotkeys. I like to just go to hotkeys. Then I click on trade, and then I click on hotkeys settings. Now this is recorded as well, so you can always revisit this. So now if I just go down these, there's some default ones that are set, but make sure that you're looking at place order stocks. There's 4 categories here. There's stocks, options, order settings, and then orders and positions. Okay. Sorry. The only one that I have set down here for orders and positions is the close one. I just set that as control 3. It just sells all my shares at market. These don't work pre-market as well. It's hard to see. Let me grab the recording for you, just so you have that link, and then just make sure you watch it on there. It's going to be, sorry, it's going to be around the, let's see here. Where's the timer? All right, there's the link. It's going to be right at the current time. So just go back a minute or two. It's going to be around the 50-minute mark in the recording if you're watching that. Okay, that is me. It's me. I grew out my beard, my accent's in the shop. I got a little bit taller than I once was. I just closed my chat. I'm going to go ahead and grab a share of this. Sorry, I'm just going to jump back in there. Oh, no, I can't. All right, we're done trading on this account for the day. I thought I had an extra. Oh, well. Yeah, so anyway, let's. That's okay. So we go to settings, then we go to hotkeys, then we go to trade, and then we go to hotkey settings. Okay. Now, there's 4 categories here. So the only one that I have down here under orders and positions is going to be the close button. And I just personally set that to control 3. So I have control 1, 2, 3, 4, 5, 6, and 7, 8, 9. They're just groups of 3 for my own mental tracking. So if I go down here, I've got the other ones set up here. So like 7, 8, and 9, for example. Where's my... Anyway, control 1, that's what I use to get into stuff. I just set that as a market order with a quantity of 50%. Now that's because I do 2 trades a day at 50%, and that's very aggressive on a small cash account. If you're a newer trader, that is super risky, and I have to emphasize the risk there. So please use your own judgment on that. I know you specifically, Mr. Knight, you've been with us for a very long time, so I can't speculate as to where you're at in your trading journey. But that's a very aggressive position sizing approach, for my opinion. And then I use control 1 as my bind. Okay, so you just click in that box, you hold control, and you hit 1 or whatever you want to bind it to. And then when you hit done, what's going to happen here is you hold control, and you'll see that the control 1 up here says buy 1 at market. Now it says buy 1 because I have this set. It'll say buy 50% at market if you set that to 50%. I have it set to 1 because I just wanted to do 1 share at a time. So then if I do my control 2, wherever that went, where did my control 2 go? Sell customized. Okay, sorry, I have too many in here because I keep showing these and I make them and I forget to delete them. So if you need to add a button, by the way, just click that plus button. But my control 2 is where I sell 75% of my shares. So like right here, for example, I'd hit control 2 because that would have been a pretty sizable, like a 55-cent jump in price. So over 10%, I would have sold, whatever I had, 75% of the shares, right? So I just set this as a limit order type, 75% quantity at last price. I don't really mess with the offsets or anything like that. I always set all my orders to good till cancel. I don't like doing the day. I always set extended hours, but this doesn't matter because you're not able to trigger the price based on market during extended hours. And then I just leave these unchecked. If you want to place a buy order and have a take profit stop loss sell bracket, you can just check these boxes and those sell orders will appear when that order buy is filled. And then I just control 2 for that one. So I've got my control 1, 2, and 3. So at this point, I would have probably gotten out, right? Because that's a pretty steep jump in price there. So that one fill, right, it would have been slightly above the 430 level. That would be about 20%. I don't really see much need for holding too much beyond that for any equity position unless it's a swing. But that would have been a very clean scalp. That's just a momentum breakout. And that's it. That's as complicated as that needs to be. So I would have hit control 1 down here for a market buy on the breakout, and then control 2 somewhere along the impulse here, and then control 3 to get completely out when it stops moving. We have another Bursnary. Don't ban me, guys. I have to bring you low float trash. And the reason I really also want to mention that too. The reason I look at low float trash stuff on here is to highlight the risk management and also to get results for you guys really fast. So if you're trading on your own, this is the risky stuff. So just take the concepts I teach and apply that to the stuff that's safer. Okay. I don't ever want anyone to just trade this stuff exclusively. I've been doing this for a decade and a half. So I know enough about my risk tolerance, and I know enough about the market and all the little mechanisms that make up that machine, where I can survive, right? And I can grow an account and all that good stuff. And you guys have seen that. Hopefully there's been consistent enough proof of concept. I don't want anyone to feel like they have to figure that out or try to keep up or anything like that, because that's very risky. Give me just 1 second here as well. I just got to check something. All right. So I did, in fact, have enough settled cash for that. So Weeble just hates me, but that's okay. One important concept here is opportunity cost. So it's funny, in my opinion, that this is just pushing. Like, this is just how it works, and I can't take that stuff personal. I would have gotten into this, but I can't let the fact that this is running after the fact dictate the way I feel about it. So I just find it entertaining that the market just kind of does this once in a while, especially when I live stream. It's kind of like a cosmic humor. It's like, hey, buddy, you messed up. Let me embarrass you a little bit, right? But the timing of that entry, you guys saw I attempted to get in. It just didn't work out. The timing was there, so that would have been successful. I've identified where I would have sold partial and sold full. Now I would have had 1 share, so I would have just got out completely around here, or 486, I think. But I can't let the fact that this is continuing to push make me feel bad, right? So in terms of execution, I put myself in front of a high potential, low risk opportunity. I traded it twice here on single shares and cut the risks immediately. And then for this third one, I just didn't have enough settled cash according to Weeble, even though I did. So, but again, that's all without any access to the information that we see right now, right? So this point in time right here is crucial. Let me just drag this over. You guys see this? This is what I saw in the moment when I pushed the button. That makes it a successful entry attempt. This is all hindsight confirmation bias, because it could have just as easily gone to the downside, right? So if I feel good or bad or anything other than just baseline about seeing this data, then that is something that I would need to work on. Now, the reason I'm highlighting that is not because I feel it, but because I know exactly where most traders' brains would be at right now. I hate trading. I'm never going to figure this out. This happens every time, right? That's just the default response to that. So, you know, the best thing we can do is call out that demon's name. It's FOMO, right? Opportunity cost is always FOMO. And move forward to the next opportunity and bring ourselves back to baseline. We got an IVP. Okay, all right. Ooh, I like this one. So this one, I'm going to just, so Top has his own strategy for this. I'm going to use my strategy in that I'm going to watch the order book, right? I'm just going to look purely at the volume. Top has identified a good setup here. I believe I see what he's looking for. So I'm going to look strictly at the order book and the time and sales. So I'm seeing a lot of market orders filled and not as many limit orders. So this is a low float, 2 million. So break over 125. So I'm going to go ahead and get in here. Now this is high risk. So I'm just trading 1 share. But I do like this setup top. Good stuff. And you're probably looking at the 3-minute if I know you. You get your moving averages. 2-minute. Okay. We're close. Oh yeah, it's nice and clean. Good stuff. So let me slap the Bollinger Bands back on here and you guys can see if you want, we've got that setup, right? Let me extend this over to the right. Now we weren't watching this one, right? We just got told about it. So we can't, go back in time and be like, I would have got that, right? We got what we got. And so for my strategy, I think we're just about looking for another pop there. And then I'm going to go ahead and probably lock it. I don't need a whole bunch of, he just sold 75% out, or he's looking to sell 138. So let's plot that out. Okay, that's where he's looking to sell 75% of his shares. I'm actually going to sell inside of that probably because I don't need a whole bunch of range on these. Just looking to offset, right? So far we're looking for just like 6 cents, 4 cents, 6 cents. I'm trading one share, so it's not going to be glorious and spectacular for me. This is not for the glory of Rome, right? I don't know why my axis is all screwed up there. So we're just going to hang out. And again, the price is going the direction it's going to make me money. And I don't want to be in it when it stops doing that. Yeah, we got to get over 132, 135. So there's a rejection range right here up to right about here. So we got to get over those. I might hang out to 140. But it is it's still a low float, high risk opportunity here. So I'm going to get out right here at 134. Okay, that's more than enough for me personally. I don't need the full move. I'm good with what I got. Right. That might make a sweet tat. I mean, it looks complicated. It's very geometric. 139, go big or go home. You could, yeah. I mean, I don't like going home, but and again, this is an area of opportunity. There's every reason for this to just blast, right? We don't know what it's going to do. We don't know what it's not going to do. We do know that there is some hesitation here, right? And for me personally, that's all I care about for these, right? These are high risk trades. Now, granted, I'm just using one share, but the setup itself is high risk. Now, it's a fast mover. It's low float. There's potential for volatility in both directions. I just want to capitalize on the move to the upside and get out. Okay, that's just me personally. Now, Top also has his own approach to it. So I'm not talking for him. He has a very specific approach, and it's an approach that works very well for him. And that's where, again, there's no one size fits all. Like Top and I have had many, 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 many conversations, to get him to where he currently is. And then he's taken that foundation and kind of turned into an absolute monster with it. I love seeing it. So we're going to see different things. We're going to see the same things, and I can always get back in, right? Not a big deal. We're just taking two slightly different approaches to the same setup. So that's the advantage in having, your own trading plan, because then you don't have to rely on what Pookie does, or what Lee does, or what Bull does, or what some other YouTuber does, right? You're trading your trades on your own analysis for yourself, right? And that's my goal, is to get everybody to that point. And in order to get to that point, we have to figure out what doesn't work for you as an individual and go from there. Okay. So that's why we got to start the conversation somewhere, whether it's you reach out to me or you chat with other members, or maybe you reach out to Nikki and she just kind of listens to you for a little bit, kind of talks to you. It has to be a conversation, and it has to be based on you. It's not something that we can just kind of tell you what to do, You want emo in the chart? Well, I want momentum. Momentum. This is a good find, though. I like this one. Good little pop. But you guys have watched me do these trades all day, right? I've taken 2 small single share losses. I took a profit on XPON. I took a decent sized profit on that. I had some pretty heavy drawdown here on Trib so far. It's coming back up. Scalped a decent profit on this one. Now, the big takeaway here is that if you notice, I'm net positive, despite the fact that I've lost the majority of my trades in terms of a win rate. And that's why that is a BS metric. So I'm going to go ahead and watch this one here, actually. Now, this is a completely different type of setup. Okay. So I don't want anyone to feel like this is not the strategy I'm teaching you guys. I'm using something completely different here, and I'm using it just based on the volume, order book time, and sales. So I'm going to try to time the pullback on this. So Very high risk. So I'm just literally, I'm not even going to let go of control. I'm just going to get in and out as fast as possible. And that's based on a whole bunch of stuff I'm seeing that, you know, is a little bit complicated to articulate. So what's up, Deathgun? How's it going? Good morning. Good morning. I was just walking through the net positive end result despite losing, quote unquote, most of my trades, right? I think I've lost 3 and won 2, or yeah, small ones. But we're still net positive, and I'm still like 1.5 times my daily goal. You're going home in an IVP ambulance? Oh no. Did you buy the absolute top with your full portfolio? Did you borrow money? Just kidding. Don't do that, guys. All right. So I'm going to let go of control here for a little bit because it's annoying to hold it. But you guys get the idea, right? I'm trading it based on what I see. Top is trading it based on what he sees. And we are completely different traders. And I'm taking more entries than he is. He's single buy, double sell, I assume. Now I'm just getting in and out, though. So we don't need to trade the exact same entries and exits in order to trade the same move, if that makes sense. You borrowed money from Sam Legbragger Minoza? Oh, no. How's Sammy doing? It's Tommy the Brick, and they're going to come and say hi to your kneecaps. So there's a 128 wall, 1339, 12, 8, 10, 8, 14. So they're definitely putting some stress test here in the time and sales. Now, there's still more volume coming, or sorry, the order book. There's still more volume coming through the time and sales, or there was, I should say, without the order book being adjusted, which means that those are market orders, right? Or they're off broker exchange reports to the chain, but those typically come through in larger blocks. So in this case, I need to be very careful if this bid-ask spread opens up and those continue to flow in, because that has potential to drive the price down, and I don't want to be in at that point. So now we have a 2-cent spread, so I'm going to be a little bit more cautious, but this is my absolute hard stop, is the bottom of this wick. So that's my hard stop right there. They're in stream. Yeah, the mapsters. All right. We also see Trib is slamming back here to the upside, it looks like. So let me just peek over there really fast. Yeah, boy. So I'm going to uncheck this so I can do my control 2 for a sell. I'd like to still get it over 239, 240, but we'll see what we get on that one. Can I look at Wolf? Yeah, give me just a second here. I just want to watch this one. Actually, no, yeah, let's look at Wolf. So they, Google, I think, if I remember correctly, they just subsidized them for 1.4 billion or 1.8 billion or something to support the TerraWolf project. So did this one just halt? That's okay. Either way, right? Trade is a trade is a trade. YOLO, right? That is what it is. I'm going to exit this one here because I broke below my stop loss, right? And again, that's successful execution, means following my rules, okay? So now we got to wait and see what Trib does. Now remember, Trib is a reduced position size, so it's only 25% of the shares that I originally bought because I sold 75% of them before all that drawdown. So I still put myself in position for a guaranteed net profit, and I still just have 25% of my shares with an average of 222 per share. So that is the extent of my trading for the day because I don't have any more settled cash, and I've taken way more trades than I normally would, but that's just because I want to demonstrate things in real time, and I'm a huge fan of putting my money where my mouth is, especially on like smaller accounts that you guys can relate to. And I'm just going to turn off the Bollinger Bands here. But does this stuff help? Like, does me walking you through a strategy help, and then showing you a real-time example, and then also showing you a different strategy on the same stream, and then walking you through a real-time example, well, a couple, over and over and over again? Why does what happen? $5 journey. If it does help, please just let me know in the chat. Just put a 1 in the chat if it does. 2, if you'd like to see other stuff. I know I try to offer a variety of stuff on the streams, and this was originally meant to be a MadMaverick coaching stream. So let me put his link here in the chat as well, and I'll do it again on social media here. If you guys are looking for someone to kind of show you the ropes here, his strategy is very consistent. It's very simple. It's low stress. So if you're looking for someone to walk you through that and build your trading plan step by step, that's your guy. That's it. I'm not a sales guy, but if you've lost $40 last month in the market and you're probably going to lose $40 this month, it's at least worth considering. And if you just don't know what a coach is, check it out. Start the conversation. We can always talk to you about that stuff and work with you. But this guy's here every single day. He puts out his watch list every morning. Well, most mornings. I can't say all legally, but most mornings he puts his watch list out. And most of the time there's some bangers on there. XBON was on the watch list this morning. You guys can go check it out. He usually posts at like 8:32 a.m. For some reason, it's always like at that time. But I love it, right? He's just very consistent. He does the Rest to Retire newsletter. He's got his Swing Scout. He's got his coaching program. He's been here for years. Like him and Austin, and he's one of the like they were here before Discord, right? Way before me. It was Austin Lee, and Lee's MadMaverick for those who don't know. So if you're looking for someone to get you started, I can't think of anyone better right now, and it's very accessible. So he's there. Get in that program, harass the hell out of them, right? And just make the most of it. Like he's here all day, every day to help out. Yeah, Tammy, the Slack days. That was before me, but you were there. Tagman was there, I believe. It just, if you guys take anything away, it's consistency means success. And people like Tammy that developed a very thorough skill set. She's very consistent and deliberate. Top is very disciplined. He holds himself accountable. He's very humble, very, very consistent. He looks at his trades in sets of groups, like sets of 10, sets of 20, studies himself, studies the trades, and that's how he improves. Lee, very consistent. Dude's here all day, every day. Porter literally relied on trading for survival, right? He was in a very unique circumstance in a foreign country without a support network, figured it out, right? Through consistency and through self-accountability. I'm just kind of looking through the chats here. I see a lot of names here that have very similar appeals, right? And you guys that are successful, the ones that have made it, it's because you guys have continued to show up and continue to put in the work and to hold yourselves accountable. Not in a bad way. I'm just saying that you put your foot on the gas, right? And took control of your financial future. And then you also learn to take your foot off the gas so this doesn't consume your life, because you don't want to become a slave to the market, right? Because then you're not doing anything healthy, right? So this is the ultimate side hustle, but only if you learn it all and then forget it all. You don't need to learn it all. Just learn enough. I'm probably going to get out of Trib here in a little bit on maybe the next pop, or I'd like to see over 260 if it goes. I don't see any reason why I shouldn't. That's a lot of strength. Let's see what else we got here. We got 290. I don't have high confidence in that, but who knows? I mean, yesterday, BSLK ran like 500-600%. Don't like that wick. So we'll see if that gets bought up and pushed through, because a wick doesn't always represent rejection. It also represents strength, because the price did push up through here. And that's another common misconception that a lot of people tend to have about the market. Thank you, YouTube gurus. But yeah, we'll see where it goes. And again, this is a reduced position size for me, so I don't mind if it does some weirdness. I'm already up 6% for the day. I can cut this right now and just walk away. So I might do that pretty soon if it doesn't get bought up, though. So we'll see if it gets over 232, 230, 231. So they're kind of controlling and compressing the price. There's the wall I'm looking for. So 230 wall, 50.55K. So 230, I'm going to watch that. That's going to be my golden child. And that's when we get our next break up to potentially 260. We are now over the 230 wall. It has split, gone to the bid side. And this is where it gets a little more complicated. We got a 355 wall. I'm not going to be watching that. That's for later, right? All right, so there we go. So I will hang on to this a little bit. I do like the volume on it so far, but remember, this is a reduced position size, so I'm okay to take a little bit more exposure on it. Ching, ching, ching. Adrian, dude, you were in Chicago with us at Trader's Paradise. It's different in the room, right? But you've been with us for a while too. It's all about not losing money and not losing yourself. Like those are the two things you don't ever want to lose in the market more than necessary, right? So if you're just constantly slamming your head into the wall trying to figure this out, and you think it's just because you don't know the right strategy, and you're not using the data that you've collected to assess yourself and your reaction to things to figure out why you aren't able to consistently follow that strategy, and you have to jump to a new one every time you take a loss or a set of losses, that's a huge opportunity cost that you're not seeing. Okay, so your job is not to make $1 million in profit your first year or two. Your job is to collect data about yourself and figure out why you're responding to certain things a certain way, and how that manifests into specific actions that get in your way. Okay. So it's simple. Well, just don't lose all your money. I hate saying it that way, but that's the concept. That's a very simple concept. Everyone agrees when they start trading. I don't want to lose a bunch of money. You take a couple of big wins, you take a couple of big losses, you get comfortable, you end up starting that cycle of a big loss after big loss. And that's when it gets painful. So we have to fill that gap with specifics, and that's why we have the coaching programs and things like that, so that you guys can see specifically, just brick by brick, you lay out that path ahead of you, and then you follow it one step at a time. I'm not going to get too preachy or anything like that. I'm here to make millions. Am I in the wrong chat? No. How fast do you want to make those millions? You might be in the wrong voice channel. We can optimize that in lifetime, but I'd rather see you go through a coach first so that you get that foundation built out, because we go a little fast up there in lifetime. We also focus very heavily on psychology and neuroscience and stuff. So I don't want anyone to, and stuff outside the market, like risk hierarchy and things like that, financial stability and literacy. You have no idea how I drink that in the morning. Well, I use this thing. Just guzzle it down. Should have been in the military. It gets a lot worse. Yeah, top. Learning to lose money is a big deal. We need to cooperate with it. Absolutely. You need to become a good loser before you can become a good winner. And Deathgun, you are here today, every day. This guy's here. And he's taken a bunch of small losses, but he has a huge advantage over everybody else in this room in that he is young and he's already mastered limiting those losses. So it's just a matter of fine-tuning the strategy and the entry timing and the fuel that you're putting into those. And once you get that right special combo, that special mix, you're going to be unstoppable. Like you're going to run circles around everybody here. While we're rotting in the ground, you're going to be teaching the next generation. So embrace that. It sucks right now, taking all those little paper cuts and seeing red after red after red. It's discouraging, and that's where you got to get the resiliency, and you have that because you keep coming back. You're not coming back out of delusion or saying, "Oh, today's the day. I'm going to make the next big run," and then putting 90% of your portfolio in there. You're coming back with a fresh mindset every day and saying, I don't want to lose today, but if I do, it's going to be small and controlled. And that alone is making you a successful trader well beyond your years, right? So hang on to that, and we can work on the technical stuff. That's not that hard. But you've already kind of mastered the hardest part for what most people run into, and that is just accepting losses as they occur. Now you're getting a lot of them short term, right? Just it seems like they're back to back. And again, that's just a fuel and engine combination issue. But you're operating that machine the way it's meant to be operated, and I love seeing it. I'm going to go ahead and look for an exit here above 250 probably on Trib for the remaining 25% of my shares. Actually, I'm going to sell 75% more of what I have left here at about 14%, so it goes up higher because it always happens. If you ever want the price to blast, just sell a bunch. Just kidding. I'm going to sell another 75% up here if it goes back up. I did want to sell above 260. There's 265, and it looks like we're probably going to get another pop here based on the order book here. So let's watch that 268. There we go. So there's my pop and my fill. And I got one share left, so I'll probably just sell that on the next pop here. So with that said, you know, I want to work with you on the specific timing for your entries and exits, because I feel like what you're trying to trade is just, I'm going to get out there. I'm all out. What you're trying to trade just doesn't match. It's not in alignment. You're just using two different gear sizes, in my opinion. So that's very easy to fix. It's just a matter of looking at the data of what you're trading, when you're trading it, and how the trades go. So that's something we can definitely work on, right? I'm gonna go hit something. Is it gonna be a pillow, or you can go hit the Quan? I'm just kidding. You also have to remember, right? There's the power of compounding negative. Okay, when you take when you take 1% losses, if you take 10 of them in a row, you're not taking 10% overall loss. You're taking 9.69% overall loss, or 9.5 or something like that. The remaining portion of that loss, you know, the difference between 10% and 9.5 or whatever, that disappears into the ether because of compounding negative, right? Now, if you take 3% profits over and over and over again, instead of getting 30% profits after 10 trades, you get 39 point something. So that extra 9 something percent is also the result of compound, right? So that is a mechanism that we have to exploit. And if you're taking small loss after small loss after small loss, you are absolutely taking advantage of that. And I love seeing it, even if it sucks in the moment and it just seems like there's no end to the red. One thing I do want to work with you on is the order book. And I want to teach you volume, because that I think would help you tremendously when it comes to the timing of those entries, because the small red candle and stuff is great. And the 3% rule, or sorry, the 1% rule is great. But if you're not applying it to stuff where it makes sense to apply it, like this, you know, you can see that's all over the place. Like that's a sine wave, right? You can't trade this stuff with that strategy on these lower time frames anyway, right? This strategy, the 20 MA strategy, relies on two things: a pullback or a push specifically into a compression zone, right? You really want that supply and demand to come together. Sorry, let me just stretch this out here so I can actually draw it, right? You got to see that supply and demand compress and then release. That's what you're looking for, right? You're not looking for this where it's just push up, right? Compression. It's the same concept, but it's a different approach to it, right? And then like you're pushing into resistance from one side, and then instead of like this side here falling, sorry, freaking Weeble, man, it hates me with these drawings. Instead of instead of this compressing and then this one here being the one that disappears, for a volume breakout, you're doing this one. So it's the same direction as the original impulse. So in your case, when you're looking for that small red candle, which is what you're using, right? You're looking for the price to compress into a zone for that supply, right? You're looking for the supply to push down and then get depleted and be removed for a release to the upside. Does that make sense? That's what the Tony MA strategy relies on. Now, the overall bias should be to the upside, yes. And that's where the positive slope comes in, and it takes care of that for us. But for the volume breakouts and things, the stuff like this, the low float trash, it's very difficult to do that kind of pullback strategy on, because those pullbacks tend to be very deep, or they tend to just be reversals for the day once the volume falls off. So what you're looking for instead for these should be a volume break. It's a structure versus volume. So in this case, you're looking for the price to push up, 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 up. Oh, this one should be higher. Sorry. It's got to be up here. You're looking at this mostly like a battering ram, right? It's going to hit that castle door. It's going to deplete it. It's going to weaken it. And then this one up here is what goes away, And then this is released and it can chase the price all the way up to the next zone. Okay, so it's just a matter of aligning that fuel and the engine that you're feeding it into. So again, that's something you and I can just have another focused discussion on, just like we did with the 20 MA strategy, right? And we can just figure out specifically, when and where to apply which one. Okay, but go do what you got to do. I don't want you to stare at the market all day, especially if you're feeling frustrated or anything like that. Just go do what you got to do, right? We got to just put the market back in the box and set it on the floor next to our desk once in a while. If we're having kind of a frustration, that's probably not the best time to be staring at charts. Ain't got nothing to do. All right, well, let's look at volume then. We can look at the order book. So you see this 295 wall? It's going to be really hard to see, but there's a 10,043 wall here at $2.95 now. Right now it's 97.84, 98.99, 10K, 856K, 7K. So this 295 wall here is pretty critical, right? So that tells me that a break over 295, right, given that it's so volatile that the wall size is there, that there's potential for a push higher, right? So this is not an area. We just broke over that. So let's look for a pop, right? We can look for a pop probably up to like 315. So let me just plot that level. All right. Then I'll walk you through how to do all this stuff. That 295 wall, let me just draw this out. I'll do this really quick because I do have to jump off here pretty soon. Let me just draw this and I'll hit no extension there. So basically pretend that this is the order book. Let me erase all these other lines here. You guys see that 315 just got hit from our 295 break. Just a real-time example. Let me just erase all these lines so it's less complicated and less messy. 355 is my other wall here, but I'm going to erase that line. You guys can track that on your own. So let's just say that this is the order book and you've got a bid and an ask wall. Okay. Are you familiar with the order book? Paper trading. Paper trading is one of the most underutilized tools you can possibly have because you're not getting nothing. You're getting experience and data. There's a critical mindset that that we can use to reframe that because paper trading is something I use extensively. All right. So here's your order book. Let's just say you get a bunch of tiny walls here on the bid side. Let's say you got tiny walls here on the ask side, and they don't get any smaller than that because the drawing tool. But you get the idea, right? There's some walls here, walls there. Maybe you got one down here instead, right? Here's the bid price. Here's the ask price. The mid price is the current price that you see reflected up here. The bid side is how much people are willing to pay for shares. That means that those are the people that have cash, and this is what they're willing to commit to buy. The ask side is how much people are looking to sell their shares for. Okay, so there's the bid and the ask, and then just to very briefly and very simply explain, volume is not the result of buyers or sellers. It's a result of buyers and sellers, and every transaction requires both. It's not something where there's some abnormal number of sellers or anything like that. That's more for the auction cross specifically, but I don't want to go down the rabbit hole. So simple concept, we got the bid and the ask. And then what we look for as momentum breakout traders is for the ask side specifically, or for bullish, to become depleted. Okay, and the reason we want that is because we want to see that this wall is getting hit over and over and over again, like that battering ram, because you'll see that reflected in the price if you look at like the tick chart. And what we need to look for is a big wall, so bigger than the others. Like right here, we got a 315 wall. It's 9,646 units. That's the biggest wall on here. We've got another couple smaller walls, about half that size, but this 315 wall is the biggest one so far. You got a 310 wall here, about half the size. You got an 8200 wall at 320, right? So really, those are the key areas to watch. So there's one at $3 at 69.01 down here. So let me just plot $3 really fast. And then if that comes up to the top of the order book here, we can watch that. But right now the bid is currently at the top, and now they slapped a 292 wall on. So let's ignore that for now. So what we need to do is see that the ask side is getting chipped down. So let's say it starts at 10K, then it gets down to 8K, then it gets down to 6K, and then it goes away, right? What does that mean? What does that tell us? It tells us that orders are being removed from the pool of pending orders, right? Now, there's only two ways that can happen. That's they're either removed, and as in they're canceled, or they're filled and they come through the time and sales. So if we're watching a wall get chewed on, like this 272 wall, we see a bunch of fills down here on the time and sales. Those orders were being filled. It's not something where they're removing the orders to make it look like they're being filled so they can trick people. And then what we can do is, as this is getting chipped down, we can also understand that the broker, the institution that that wanted to place those orders probably don't want to get them all filled. So once it gets down below a certain amount, they're going to try to cancel those orders. And what we need to do instead is look for those orders to come through and then 1 cent above. And what that means is that the remaining orders that they had pending were trapped and they were forced to fill. And what that does is that pops up the volume really fast. And it also means that the price pushes up. Okay. And the reason that happens is, again, the price moves based on where the bid ask is met and where the volume actually gets filled. And I know I'm going a little faster. There's a lot to cover, and it's a very short period of time that I have to explain this. So definitely keep showing up to my live streams. I talk about it a lot. But when the price gets filled, right? If I have $1 million and I want to buy some shares of something, if I put all $1 million at $2.86, I'm not going to get all $1 million worth of shares at $2.86. The price will go up because some of those fills are going to be on the ask side, and that's going to force the price to go up, right? That means that some of those shares will get filled at 287. Some of those shares will get filled at 288. Some will get filled at 289. And guess what's happening? Because I've placed a large order at this price, only so much of it can get filled here. Only so much of it can get filled here, here, here. And then what I've done is I've forced the price to jump 4 cents just from one order that's getting filled as much as it can by the exchange matching it with other orders. And that's how you get a momentum breakout. It's capturing all these other orders that are pending for those massive, massive fills. And then that also tricks all the other algos to jump in and start filling their orders. And that's how you get those pops. So again, there was one down there at 280, was it 276 or something? It just filled. So let's just watch the $3 and 302 range. And then hopefully we can see this in real time. But does that make sense so far? We're just looking for an exploit in the order book. And this is something you're not going to see on YouTube because they don't understand it well enough to know the difference between the walls and all that good stuff. But what you're doing here is you're exploiting a chain fill. And that's just how the exchange works. And that's something that very few traders take the time to actually understand. So I'm telling you this so that you don't fall into the same traps that most of those traders fall into, and that you're just blindly chasing walls. So if you see a wall get chipped down and pulled, but the time and sales is completely flat and it's not moving, or you're not getting fills above that ask price, you're not getting a chain fill. You're just getting manipulated. And that's typically when you see the sell-offs. Okay. So let's look at SNOA because Top is currently trading that one. So we got a 595 wall here on the bid. So let's watch this. It's the exact same thing to the downside. So that wall just got chipped down and pulled. So we can expect a little pull down, right? For now. Now, that's not to say they're not going to keep pumping it. It is a lot of strength. And that's where we have to look at the time and sales and see if they're going to flood it with market orders. So we've got a 610 wall that I would like to watch. And we've got that's about it. So most of the walls here are on the bid. You can see that's heavier on the bid. So let's watch the 610 wall. It's 1595, 1795, 1862. So they're adding to that wall. They're expecting magnitude, right? So it's 1862, 17, 1662. These little walls in front are volume threshold tests. They're seeing if it's enough burn rate, if orders are getting filled fast enough to justify letting it get to the 610 wall and start risking that chain fill. So it's currently 1662. 1627. It popped up to 1690 for a second. Now it's 1627. This all happens very fast, by the way. 1575, 1805. So they're really adding and removing from this is 1905 now. So there's multiple algos that are looking at that 610 level now. They're all jockeying for position. So we got a range at 593. We got one at 610. So let's do the 593 level. All right. So 593 looks like it got filled. So let's look at the 577 level, since that's the bid side wall here. 577 wall is still intact and it's full. So now let's watch and see if that's going to bounce there or if it's going to slam down through there. You've got a wall at 566 and you got one at 603. So let's draw the 603. 1, 2, 3. There we go. Okay, so now right here, the only thing existing that's close to the top of the bid-ask spread is going to be the ask wall, and now it's the bid wall. So these act like little gas pedals. So the farther, the closer something gets to the top, the more it acts like a magnet, right? So if the bid side has the higher wall, price is likely to come down. If the ask side has a higher wall, the price is likely to move up. Now, this is just a few cents at a time, so you can't use that for like efficient trading, but it's enough to at least give you some short-term sentiment for quick scalps and things like that. So let's watch the 603 wall. Let's watch this 575 wall. It's 1100. Let's see if it gets chipped down. It's pulled immediately. There's a 571 wall now. So they're just slamming this price down pretty aggressively. So let's watch the 571 wall got pulled. So we should see it pop to the upside. Above 571, sorry. It's hard to talk this fast. I feel like an auctioneer. So now we got a 541 and a 603 wall. So let's move this one down to 541. Right? And we really want to look for the big walls. We don't want to deal with the small little 200 walls or the 600 walls or anything like that. And the numbers are going to change based on the ticker because it's orders and every stock has a different float. But you can see right now there's nothing up here. There's nothing in the bid or ask. So that's scary town, right? And that's where you have your stop loss and stuff just in case. So right now, there's no opportunity here for a momentum scalper if you're looking for a momentum break based on the order book, right? You have to look for 6. You have to look for 603, 590 if you're super risky. But right now, it's going to be that $6 level. Does that make sense? Like, this is not the time to jump in after a red candle because you see a little bit of bullishness without justification, right? So we have to let the chart and we have to let the volume drive because they're always going to be right. I kind of wish one of these was slamming up to the upside so I could show you the wall get chipped down, but that's just the kind of, it's the sign of the times, right? All right, hang on just a second. All right, so this one's got, 264 walls getting chewed down a little bit. That's good, 265, 267. Let's watch the 280 wall. This is going to be on TRIB, TRIB. So it's 16,313 shares pending at 280 for a fill. I'm watching the time and sales. It's lit up like a Christmas tree. This gives me a good indication that the price is strong, and it should be strong at 280 if it goes up, right? So let's just take a look here. Sorry, let me catch up on the chat here. If you're doing the same thing 200 times and you're expecting the result to change, you're insane. Yeah. Now, the difference here is that the result needs to be shifted, right? It can't be the end result that you're expecting to change. It needs to be the data, right? I'll talk about that here in a second. But let's watch the 280 wall here. Now it's 12K instead of 16K. It's 12,402, 12,602, 12,702, 602, 702, 502, and it's pulled. So now we should see it pop up 286, right? Not a very big range on that one, but that's the goal, right? And then you got a bigger wall here at $3. So let's plot that one out as well. All right, so that's going to kind of be the land of milk and honey there. 285 wall, big wall, 23K, pulled immediately. So there's a lot of strength on this one so far. So let's watch the $3 wall. It's 18, 19, 18. Kind of pushing up and down a little bit here. So that's the heartbeat, right? And this is where you see the heartbeat that I talk about all the time. It's those smaller walls, the volume threshold test. And then when you get a stagnation at the top, that's the order book getting chipped down, the ask wall. Oh, he's starting to switch. All right, so I'm going to cut this off. I do have to jump off of here, but hopefully this helps. I know I kind of rambled there a little bit at the end about the order book, and it's more of an advanced strategy. So I don't want anyone to feel like they should focus on that exclusively, especially if you're a new trader. But let me put the coaching. coaching link here in the chat for anybody that's curious as well. There's no pressure as always, but I want everybody to have access to it. If you're looking for a mentor to help you build out a trading plan, that is the link. And he's starting here in literally 3 minutes, or he's starting now. So I got to jump off of here. And gonna definitely want to work with you on this volume stuff because, again, it's just a misalignment. I think you're solid. Don't look at your red screen if it's going to make you cry. Emotions are not good for your trading. Okay. So if you're feeling things, it's a good opportunity to take a step back, right? Let me end the live streams. Thank you all for watching if you're not on the Discord, and I'm going to hang out in there for a second before I jump off. So thank you all. Have a good time. Bye.